Alrighty, traders, good afternoon. We're going to do something a little different today. We're going to go through the small account portfolio that we manage here, just to give you an idea of how we modify our trades and what we do on smaller accounts. So we do have 3 different level accounts that in the Discord channel and in other areas we focus on. So I do have a trading account for the Income Navigator service. I also do a small account, which we started at $10,000 in January, and then we also have an IRA that we started at $200,000 in January as well. So we do trades for all 3 of those accounts. What I want to do today is take you through the small account, because we really haven't done too many live updates on this account to see where it is. If you really like 0 DTE and you really love day trades, you're going to hate this, because it's a small account and it's a little bit more difficult to manage. And to me, it's a whole lot less exciting, but it makes money. So money is the end result. And this is what gets my kids at least a little bit excited, because they start to see money flowing in and they start to get the idea of it. And we had a discussion in Bobby Gaines' group yesterday in Trader Nerds. So shout out to Bobby and his team. But in my section there, we talked a bit about kids these days and the youth and saving, and how most people, even adults, aren't really interested in a whole lot of training. They like the results of training, but they really just don't like school and they don't like learning. And if you don't, you're probably not one of the people watching this video. Most people watching these videos, you're into learning. You want to learn something. I want to get some trades. I want to get knowledge. I want to make more money so that I can have those things that I want. I want freedom to do what I want to do, go where I want to go. So I want that freedom to maybe even quit my job. I want to be able to have money to retire on, do some fun things with the family and so forth. So if you hear the phrase, hey, money doesn't buy happiness, that's usually said by people who don't have money. Money doesn't necessarily buy happiness, but it buys a lot of fun things to do. So our goal here is to get small accounts built up so that we can then make more money and potentially even live on those trading accounts as we get them larger. So let's take a look at the small account here. And if you go back to my trading plans, and you can look at some of those videos on YouTube, and you can read my trade plans, most of those are all laid out for a larger size trading account, which would be 50K or larger, up to whether it's $1 million, 2 million, 5 million. All depends on who you are and what you are trading, and what your individual amount to trade is going to be. But also, you got to get started somewhere, and a lot of people want to just start off with like $5,000 to $10,000. My suggestion is keep putting money into an account till you can get it to 10 grand, so that you can actually do some better trade styles with it. Otherwise, you're really limited. If you've got a $2,000 or $3,000 account, you're really not going to be able to trade futures. You're really not going to be able to trade a whole lot of the different strategies that we use, because it's just going to take too much buying power. You're going to be really limited in your underlyings. Margin's going to be a killer for you. And you're really going to be limited to credit spreads in most cases, which are fantastic trades. And I do love credit spreads. And if you're not good at credit spreads, you won't be good at anything, because naked puts and credit spreads, and then either buying or selling calls and puts, those are the 3 core trades. You got to understand those and how to unwind them. Anyway, I think I just talked for a few minutes and giving you some of my theories and opinions, but we start with a $10,000 trading account. And why $10,000? What does that do for us? Well, it enables us to be able to trade some futures. And to me, futures are the best trades out there when you can afford to start trading futures, simply because, number one, the amount of leverage that you get is fantastic. And for a small account, you got to have great leverage. Number two, you really want to have the ability to potentially trade after hours and adjust trades there as well. So I think those 2 things, there's a couple other really great reasons to trade futures, but those are some core reasons for me. And you've got good diversified products with good liquidity for the most part. So really good opportunity to trade futures. So get yourself a $10,000 account to at least get started. And here's what we do. So I'm sharing with you a little trade tracker that I put together that we use to track a lot of the different trades I have. And I not only trade the actual accounts here, and I track all of my accounts, whether it be IRAs, the main trading account, and all the other accounts that I have. If you scroll off to the right, which you can't do, you'd see another 7 different accounts that I trade of varying sizes here. But this is the smallest account. This is a $10,000 account we started with on January 1. And let me just talk a little bit about the trades in here. So you know the 112 is my trade. That is my go-to trade. I love that trade. And you can do that trade in small accounts, large accounts, really large accounts, IRAs, what have you. So the 112 is a fantastic trade to do. In most accounts, you're going to want to use futures. In a small account, $10,000 account, you're going to be wanting to use the micro mini. So the MES, if you would. So you can see here, MES makes up the main underlying for the long-term 112 trades in this account. Now, in a $10,000 account, what's our goal? Well, our goal on most of my trading accounts is around 3% a month. That's the minimum goal that I need. That's the minimum goal I want to hit. We often exceed that. Last year, we had an 80% return. We killed it last year. Okay, that's not the norm. I'm hoping to get that 33 to 36% a year, and that's my goal. Doesn't mean that we always hit it, but we've gotten it the last 3, 4, 5 years easily. So that's the goal. Same thing in a small account. You can be a little bit more aggressive, but I'm going to not go to that extreme with you here. We're going to stick to some of the same trade plans that we normally do in the larger account, but we have a little bit of flexibility here. I am still trying to stick to 50% maximum BP use in a small account, trading futures. I'd probably try to want to stay under that and closer to 40%. Right now, I happen to just tick past it with a new trade. Otherwise, I think we're pretty much always on schedule to be under 50% because if span margin hits, it's going to affect a small account a lot more due to the overall risk to the account. So in long-term 112 trades, we're going to use MES as our goal. Let's say we have a $10,000 account. If we want to make 3% a month, we want to hit $300. So $300 is our goal in this particular account. So how do we hit $300 a month? Well, here's one of the core ways to do that. If we've got an MES trade on every single month, you got these stacked, one's coming off every single month. And as they come off every month, you're going to be netting somewhere around $200 to $300 on average, with volatility being as low as it is lately. $200 to $250 is where you are. If volatility spikes up a bit and we start to get a little bit more volatility in this market, you're probably going to be looking closer to $300. Just on the 112s alone, you can probably hit your monthly goal. And then I like to pepper in either some strangles on futures. I can either use MES, which I'm already using for the 112s. You can use MCL, which is the micro on oil. I hate anything. MES, MCL, I hate them. They don't have as many expirations I would like. I don't have the liquidity I would like. It's not as easy to get in and out of, but it's all we got when we have a small account. But I think you can use oil futures, and I think you can use gold futures. What you may not be able to do is do as high a delta as you anticipated, or that we normally do. Now, for many of our trades, we use the 6 or 7 delta calls and puts. I may even go up to 9 or 10 delta. I don't typically hit one standard deviation. To me, that's a little higher than I want to go. I don't need to do that on futures because of the leverage, but I can get down to probably 5 delta, 4 delta, and reduce my buying power and still make good money on these trades. And we're going to jump into that in a minute here. But if you look at the CL trade here, we just put this trade on today. So we just dropped a strangle in here today. These don't really mean anything. So we just dropped this on for 56 cents, knowing that oil is a 1,000 multiplier. So we took in $560 on this trade today. We only used $2,200 in margin. Again, the greatness of futures. But I went out a little further on the deltas to keep that margin down. So my cost, $560 on 2,200. already that's a nice 25% return. I'm hoping to close at 50%. That's our goal always. So a 50% loss on the, or 50% win on these would give me about $280 on that $2,200 in margin. So that's what we're shooting for on that particular trade. So a little higher risk on these trades, but we're still able to make pretty good money. And then gold, same thing. We are at the one we put on the other day, $410. Gold's 100x multiplier, like most standard options are. So we took in $410 on 2,700. I'm looking to close at 50%. That'll give me $200 on a little over 2,700 margin account. Again, that will give us more of, of our percentage. I think those are a little higher. We could certainly keep an eye on those particular things. Now, from a risk standpoint, in the larger account, I typically won't exceed 2% of the account's net lick from a risk standpoint. On smaller accounts, I'm willing to go up to about 5%. There's small accounts, you're not taking as big a hit. You got to take a little bit more risk to move those up. I don't think 5% of your net lick is a giant number out there right now. So I don't think it's too crazy to look at 5% risk on your accounts. A 5% risk on your account here with right now a $12,000 account, 5% on $12,000, around $600. Okay, we're a little bit over that here, so we're closer to about a 7% risk on these particular trades. It's a little high. I don't necessarily recommend it for everybody, especially starting out. You may want to stick with the MCL options, which are going to give you a little bit lower premium, or you go out a little bit further. My premium's a little higher than I would like. Here, if I take a 2x loss on this, it's $800. $800 on an account right now that's around 12,800 or so. It's about 6%. So again, it's not outrageous. It's not far off. 5% is about where I would put my max loss risk on these accounts. All right, on the trades, that's what we're looking at. Now, how does this work? We expect one of these to come off every month, and I would expect one of these to come off every month. So there's at least $200 there, probably $200 here, about $400 on a $10,000 or $12,000 account. I've easily got my 3% in. If we go back and take a look here, look at June. This is actually going to be July now. So if we look at June and July, June, we had a fantastic month. We had one of the MES, long-term 112s come off. So we closed that one for $209. And then we also had a gold and a oil strangle both hit for pretty good funds. It seems high. Yeah, so we took in really great premium on that strangle. So we made some pretty good money on that. Made $1,100 on the account. This month we're off. We're on the right track. We've already taken in $320. We had a oil strangle close today, which is why we put a new one on today. So we're at 320. We've technically almost gotten our month in, and then we'll have an MES come off. So that's what we're looking at on the small account here. And if you take a quick look, I'll show you the actual account here on Tasty Trade. Here we've got just these same trades on. We've got this oil strangle up here that we just put on today. So we've entered that one. We've got this gold strangle that's already up $60 in 2 days on this gold strangle. And these are a little bit farther out of the money options than normal. If we take a look at the CL trade, and I'll take a look at what we put on today. Here's the trade that we put on earlier today. If we go out here, you can see this is about a 4 delta on the puts and about a 5 delta on the calls. I don't believe it was maybe 5 when we put it on, but about 4 delta, 5 delta is where we entered these particular trades today on this account. So I went out farther than I normally do because I wanted to reduce my buying power, and because of the power of leverage of futures, we were able to make some pretty good premium on those two trades. So we've got an oil and a gold futures trade, and then we've got our 4 long-term 112s on here. You'll notice on this 112, it's missing the naked puts. Well, we take these naked puts here and we close them at 95%, which takes all of the risk and it takes the buying power off, which is important for these smaller accounts that you really manage. You could probably manage these closer to 90% to try to get them off early. This one's so close. I'm going to let it run because I'm really not in buying power problems right now with 42 days to go. However, we've been in this trade for 77 days. We'll see what happens. Typically around the 90-day into a trade mark is when we take these off. So the last 30 days, we usually have a free put debit spread working to see what happens on those particular trades. So this put debit spread's worth about a 7-cent credit right now on this one with the naked puts gone. So we could sell it for a little bit more profit than 100%. Potentially, but we'll wait and see. If the market drops hard, we'll see what happens. Market's not dropping. It's up 19 bucks today. So we'll see what happens. But there's the trades that we have on. Boring as can be. So if you're looking for something that's super exciting, this is not it. If you wanted to do MES trades, MES gives you quite a good array of strikes. I could also be doing MES at our standard 7 delta, 6 delta for strangles in this account. If I did that in this account, you'd be looking at a pretty low BP on these particular trades. So I could put these on as well, but I already have MES trades on with the 112s. I don't want to overexpose myself right now to all ES or all S&P type trades. I like the diversification of having at least a little gold or a little oil. You can just choose one of those and just do one of those trades every month. It comes off in about 30 days. You just need to have one running so that you close one strangle on futures every month for 200 bucks. And then you have one long-term 112 trade on. I use 2 contracts there. And then you can have one of those come off for 200 some bucks. I'm making 400 bucks a month on a $10,000 account. That's almost 4% a month. If you're doing that, I think you're in really good shape. It's boring. You only have to look into it every couple days or so. If you're doing this for your kids, they're going to lose interest. Okay. So you got to make it worth their while. You got to make it interesting for them. If you're trading, a kid's account, or you just want to dabble into it, it's a great way to get started. Understand how the trades are. It gives you an intro to futures. It gives you an intro to 112 trade. It gets you an intro to strangle, how to manage those trades without having a ton of trades on. As you noticed, I only have 6 total trades on in this account right now. So there's 6 trades going on, not hard to manage. Kids can manage these things pretty easily. They can look every day. They can look at be portfolio managers. Hey, how's your oil futures doing? Well, right now it's down 2%. Okay, nothing to do there. My gold futures strangles up 14%, nothing to do there. My MES trades, okay, this one I've already closed out. This one is in great shape. I'm getting close here to ringing the register. I'm getting close to getting to my finish line on that, so the kids can take this and just close it simply. So if you're using this, whether it's yourself or younger people, what have you, you get used to being a portfolio manager, making yourself a pretty good percentage every year. And if they've got a goal of something they want to earn, you can pull a little bit of money out. Usually it's fun to see how much you can build out of this thing. Maybe at the end of the year, you pull some out and, give them a little stipend or something like that, depending on the reason for the account, because people love the results. They don't like what it takes to get there most of the time, but people love results. They love to see what's going to happen at the end of the year. And you want to have those portfolios that really are going to be consistently growing, and they're not taking huge losses. They're not having abnormal risk, in my opinion, on this. All right, so there's our small account that we trade here at Income Navigator. If you want to learn more about that, go ahead and check that out in the description there. Otherwise, if you like this video on small accounts, you want to see more videos on small account trading, let me know. Go ahead and click the like button, drop something in comments there. And if you would, go ahead and subscribe to this channel. We'll have a lot more content for you. All right. You guys have a great rest of your day and weekend. Happy trading to everybody. Take care.